Crypto Hotep here with another investing video. Hope all is well. We are into week number 8. We're just moving along here for the family portfolio. And if you're unfamiliar with the family portfolio, go to my channel, hit the playlist entitled Investing Journal, and watch week 1 of the family portfolio. Just in a nutshell here, the family portfolio is a project, if you will, that I'm doing with my family on investments and on dividend investments. And long story short, um, I selected and listed out several stocks. My family chose from them separately, and I allocated those stocks to each family member within the M1 Finance software. With M1 Finance, you can actually create pies, and within those pies, which are like mini portfolios, you can have separate stocks. And M1 Finance is a great software to do this. So each pie is distinctly a family member of mine. And within that pie are those stocks that they actually chose. We are tracking these week by week, and this is basically just to enlighten myself as well as my family. When I'm gone, hopefully they can see these videos and it can help them. And also, if you like the videos, feel free to like, subscribe, comment, and let me know what you think. As always, these videos are not financial advice by any means. Please consult a professional before you delve into stocks, crypto, futures, anything volatile. And with that being said, we can jump right in here. Now, as always, I always like to look at the previous week before we see what we're up against this week. So, week 7 was last week, and our balance was almost at 600, not quite. We're not going to round that up. It was at 599.96, up about 1%, and the dividends were a little bit over $2 here. Now, if we go into this week, we are at 609.54. So we have cracked 600. It seems like we just cracked 500 a couple weeks ago. So 600 we've cracked. We're getting up there with our balance. I do love to see this. You can see our steadily incline here with our balance. Our weighted rate of return year to date currently is up from 1% to 1.63%. And let's see what activity we have. I think it's been a little light. So a little light this week. We've only had, since the last week, I believe we've only had one buy, and that was me for public storage. And I believe I mentioned that on the last video that I was going to buy that. So nothing too strenuous today in terms of the activity. No real dividends got passed through or anything like that. So this may be a shorter video, and we can jump right into the portfolio here, and we can go from bottom up. We'll go to my wife's stocks here. My wife has been the savior of our portfolio, of the family portfolio overall. Her weighted return is above 6%. Her balance steadily increasing here. And why is that? Well, she's been on a tear as of late with Google and Pepsi. Pepsi has been up year to date for her, up over 6%, and Google, with the tremendous news that came out last week for Google, up over 19%. What's even better is Celsius has pushed up further, and now it's down only 4.3%. If we look back at last week, I believe Celsius was down over 6%. So it's closing the gap here. All in all, her balance is about 47.52 currently. Let's go to our middle. And our middle child, Their stocks down a little bit over 2%. Amazon still in the green. Amazon was in the green for our middle child last week as well. Costco still in the red, but not by a lot. It's only in the red 0.37%, and it's closing in that gap. Costco's closing that gap as well. Nintendo still is steadily at a double-digit negative return here at 12%. Not worried about that by any means, though. We will stay the course with those three stocks for our middle. Our youngest has moved up a couple ranks here. I believe, before we even look at it, I believe it's because of Tesla. As you know, our youngest holds Tesla, and I do like the volatility for our youngest. And I think because of their age, they can handle that volatility, and Tesla has a lot of upside right now. So, yep. And just like I said, Tesla's in the green, up over almost 7%. And I laugh because in my youngest portfolio here, Tesla was probably its biggest loser with over 10, I think between 10 and 12%. And that was within 2 weeks. So within 2 weeks, it not only reversed, but now it's on an upswing up over 6%. And we were buying the dip with Tesla, and we were steadily just buying literally our same stocks that we've picked and in the companies that we've trusted, even when the quote unquote times were bad and everybody was flooding the stock. Tesla still isn't out of the water yet, and we're still buying Tesla. Apple down over 3%. This may change tomorrow, as Tesla had pretty good earnings. They had a double beat today. They beat on revenue, beat on earnings per share. They did hike up their dividend, and they also have a very expansive, and I believe it's the biggest buyback stock program that has ever come out for any company. So I am assuming that Apple is going to be reversing quite sharply tomorrow and into next week. So look for this to be in the green, actually. And then Nintendo, very similarly, with our middle down 12%. Very happy about Apple. And again, like if I can just go on a side tangent, that's why even when the quote unquote times are tough, or a lot of the quote unquote analysts are flooding the market, it's a lot of doom and gloom. That's probably the best time to buy if you have any dry powder lying around, or you just stay the course and automate your investments. Do what you can afford, obviously to do, but keep those investments rolling on auto, even when those times are, not so good, because everything reverses and the markets naturally go up. There's going to be an exhaustion of sellers at some point, and the only way to capture that is honestly just to keep buying in those companies that you truly believe in, understand the vision, understand how they make money, and you'll do just fine. And then our oldest here. Let's go to our oldest. As you guys know, oldest carries only two stocks: Apple, McDonald's. We keep it simple. Similar to Apple, down. Hers is down about 1.63%. I foresee this to be green in the next coming days, weeks. And then McDonald's down over almost 5%. McDonald's actually, they did not beat they did not have good earnings this week, but things did change when they mentioned that they would be bringing aboard maybe a new beef patty or something like that, a new product for individuals looking for more food at McDonald's, and I believe it was a patty. So the market did like that. So we'll see what happens with McDonald's. Um, and then last but not least, me. So with mine, weighted rate of return a little bit down, a little bit over 0.5%. Dividends at $1.97. Again, industrials and energy for the third straight week is in the green. This is what happened last week and the week before that. Weighted rate of return is about 3.5%. Almost all of the stocks are in green. We have John Deere, we have Duke Energy, Chevron, Waste Management, Cintas, Caterpillar, Union Pacific, and ExxonMobil. Um, I mentioned that industrials and energy would probably be, I'd probably be hanging on to its shoulders for my portfolio, especially with technology kind of bleeding out here. Let's look into technology here. Technology portfolio, or technology sector, I should say, is down over 2%. Apple, my shares of Apple up over 3%. Google, tremendous, up over 26%. Amazon, up over 5%. And then we have a sea of red here. Now, AMD, down over 31%. Am I going to get out of AMD? No, I don't. I'm very bullish on AI. AMD is a big player in that, and we are continuously buying here. I'm not changing my thought process with AMD at all. I'm going to keep AMD in my tech sector, and I believe in that. Broadcom's down over 6%. I'm not too worried about that. Coinbase, they had tremendous earnings today. They beat their earnings per share by a ridiculous number, as well as their revenue was just tremendous. So we have, I believe this is going to be on a quick reversal. And on top of that, the crypto market, in terms of like altcoins and Bitcoin, we're hoping that it's bottomed out in the short term here. So we may see an uptick here. Meta down over 12%, not too concerned. NVIDIA did drop as well, and then also Microsoft. But again, this is kind of why you diversify your portfolio, so some of the other sectors can carry the weight for you. So with that being said, consumer staples is down. It is down a little bit over 0.25%, but Procter and Gamble had tremendous earnings today, up over 3%. Church and Dwight, same thing, up over 3%. Kroger, McCormick, again, up over 11%. Colgate, 7%. So, yeah, we're down 0.25%, but in all honesty, I like my consumer and staples sector. It's very consistent. It may not be the most flashy thing, but it gets the job done for me. Finance, a little bit down over 50%, or not 50%, but 0.5%, I should say. Real estate, almost 2% down. Pharmaceutical, almost 2% down. Pharmaceutical, remember, these are just two stocks. We just have Johnson & Johnson and Pfizer. Kind of flip-flopped here. Johnson & Johnson's down over 6%, and Pfizer is up over 2%. And last but not least, we can look into restaurants and food. Domino's Pizza has been on a tear as of late. Volume exceedingly growing. And we have Domino's Pizza at a staggering 14% growth, or 14% rate of return. Texas Roadhouse, almost 5% rate of return. Hershey, over 1.5% of return. And then again, McDonald's, Starbucks bleeding out. As we all know, Starbucks did not have good earnings this week, but very similarly, we are still buying Starbucks. Things are going to turn around for Starbucks. I'm still bullish on their rewards program. I'm still bullish on their coffee. I'm still bullish on their business process and their real estate. I like Starbucks as a company, and I think things will change around for Starbucks. And so we are still buying Starbucks. And then last but not least, Coca-Cola. Coca-Cola had tremendous earnings this week. We're up over 5% in the portfolio for Coca-Cola. And I consider Coca-Cola one of my favorite offerings, whether the sector is tech, restaurants and food, consumer staples, whatever. I love Coca-Cola. Love the product, love the stock, love the company. That's why it makes about 25% of my restaurants and food section here. And with that being said, guys, we will jump into the stock analysis. But before we go, the family portfolio up week over week at 609.54 with a rate of return of 1.63%, and the dividend still sitting at $2.01. And ironically, the stock of the day is Coca-Cola. Coca-Cola, as I mentioned, is one of my favorite stocks. It's also one of my favorite drinks. It's a consistently good company, and we will go through the numbers. Their earnings they just had this week were phenomenal. They had a double beat on their earnings. We'll go through those numbers shortly here. Analysis consensus of Coca-Cola is a strong buy. Their financial performance has been fantastic. And let's just jump right in here. So on the financial side, they had a dip in 2020 again. 2020 COVID pandemic. So it's obviously it's not a mulligan, but we have to understand that. Since then, it has steadily increased revenue year over year. Their net income has also increased as well, with 2023 being its biggest year as of right now. Let's go look into the balance sheet. Their cash and equivalents have also increased, which I like to see. We like to see cash increasing. Obviously, 2020 was a low year, as well as 2019, and then since then we have increased it. Their cash and cash equivalents. Their total assets have increased. And then they've also had positive cash growth. So cash growth is tremendous. They have had positive cash growth from last year, which we like to see. Their debt growth is actually negative now, which is fantastic. So we'd love to see that. Or, I'm sorry, their debt growth is positive for 2023. It was negative for 2022. My apologies for that. So a little bit on the reverse for debt growth. But if we look down, retained earnings. So retained earnings basically is sitting money that's not paid out in the dividend for that company. Their retained earnings have increased steadily year over year. So this money can be put back into the company, maybe for some research and development type things, and improvements of services or company efficiencies, if you will. Net cash has remained consistent year over year, around between 27 and 28. Has decreased down though from the previous years, which is also good. And then when we look at cash flow, net income's up year over year. Again, the dip down in 2020, but they have rebounded very well. And we look at the free cash flow. Free cash flow now is positive. This usually ping pongs for them, though. As you can see, it goes from green to red. So you sometimes, year over year, they may be up, down. So it seems like a very, back and forth match with them. And then on the dividend side, so they have a 3.13% dividend yield, which is a decent enough percentage. The annual dividend is $1.94. And then their dividend growth is 4.78%. Their growth years, nothing can beat that. 62 years of growth. This is one of the reasons why I love Coca-Cola so much. They've been around for years. They know what they're doing. Their process is tried and true as a company, and they have consistency in this growth. And then just looking at their dividend chart, this is a fantastic chart. This chart is beautiful. This is what you want to see, just consistent growth time over time. And then the dividend percentage growth year over year here. And while we have some time, we will look into the charts, because you guys know I am a charts guy. And so we're looking at Coca-Cola on the daily. And Right now, we pushed up past $61, which was a huge sticking point. As you can see here, um, we had, if we start here, I believe this was March 27th, you can see a sharp decline down in price with a little bit of change of character, meaning that the price wasn't an uptrend. It's changing its trend. It's changing its direction, and price is now declining. So we have price went from a key area of 61 down to 59 and then settled at 58. At around 58.38, it created a daily, I call it a daily buying area. So basically it's an area of value that buyers stepped in and said, hey, I wouldn't mind paying 58.38 for Coca-Cola stock. And enough buyers came in, and that catapulted Coca-Cola stock back past that 61.44. And we can see this is where price is sitting currently right now. It's kind of between a rock and a hard place between 61.44 and 62.47. A lot of indecisiveness. So these candles are a lot of indecisive um, price action, meaning that the wicks are going both ways. So you have both buyers and sellers not agreeing here. So primarily, I'm not sure how this will hold up with this flipped area here. So we don't have necessarily in a buying area, such as this daily or this daily selling area above. What we have is we have a selling area here that previously got broken, wasn't tested at all. It just got broken with this big candle, and now it's retested. So this is that flipped area. So think of it like how resistance becomes support, if you will. So price is just kind of in between these two zones here. If we keep tapping on this, I could potentially see us breaking down here and maybe tapping on the 100 or the 200 moving average, which is right here, for a move back up. We are in an uptrend, so I am bullish on Coca-Cola. And in all honesty, I'm always buying Coca-Cola, just because, as I mentioned, it's one of the best companies that I've found. So that being said, guys, thank you for letting me share week 8 with you. I hope this video was helpful. And if you want to see anything at all, feel free to comment, like, subscribe. And as always, thank you and happy investing.